Well, welcome to the 2010-2011 budget overview. I suppose the key message out of the budget that the government was trying to put forward was that they would be bringing the budget surplus back by 2012-2013, and so therefore you're basically 3 years early. How was it done? Essentially in terms of new items, not a lot. Most of the announcements were actually in the Henry Review. So the big issues there were the super tax on miners, which is worth around $9 billion a year. The big increases in tobacco prices are around about $1.25 billion a year. And then essentially a little bit spent in terms of helping the miners to invest in new exploration. And also there was some more money for essentially the tax office to crack down on GST. Against that, and they take that money and essentially it's sort of reallocated against the issue of increasing the superannuation levy from 9 to 12% over a number of years, extra spending in the area of tax, or essentially corporate tax comes down to 28% in 2014, but for small business comes down straight away. And also small business gets a depreciation allowance where anything less than $5,000 you can essentially write it off straight away. In terms of other big picture issues, a lot more spending on health and a lot more spending as well in education. So they were broadly the message. What was happening in reality is over a 4-year period, those measures broadly offset each other. There are a couple of unexpected items or ones that weren't pre-released. The main one was the introduction of the automatic lodging of tax returns. So, as they say, just click and away she goes, and everyone gets, if you want it, a $500 deduction in year one and a $1,000 deduction in year two. The other one, in terms of unexpected movements, was a 50% reduction in the interest or the tax you pay on interest from bank deposits up to $1,000. And finally, there were some issues that were essentially aiming to try and make Australia more competitive internationally as a financial centre. So with withholding taxes, cutting those sort of rates, spending more money essentially in terms of making Australia a financial centre, and finally strengthening some of the housing markets in terms of the securitisation market. So that allows second tier players to basically get back into mortgage lending. In terms of credibility, I suppose a lot of it really revolves around the politics of being able to implement the super tax on mining. I'm not going to even try there. I'm going to basically just look at the credibility from an economics point of view. From my point of view, I think essentially that's the budget was pretty credible. In terms of the forecast, the government's got the economy growing at about 3.25% next year and then rising to 4%. We actually think it'll be stronger in the near term. So in the near term, we're expecting around 4%. They've got unemployment falling down to about 4.5%. We've got it down to 4%. So I don't really see a lot of problems in terms of rubbery figures, if you like, in terms of the budget parameters. I suppose if we just start looking about winners and losers, obviously, if we start on the losers, a lot of it is basically associated with the mining industry, the fact that they have to pay the large tax, and also on the tobacco industry. There may be some issues for accountants, particularly if you just focus on essentially the lower end of the accounting operations, where we hear that some accountants in the suburbs, if you like, 20% of their business is that sort of tax return, and that's going to disappear. In terms of the other losers, you'd have to be a little bit careful about pharmacies, because essentially the pharmacies' prices are going to come down as part of a deal with the PBS. And then in terms of the winners, the main winners are going to basically be small business in relation to the tax cuts coming earlier, the corporate sector, although part of that is going to be offset by the fact they're going to have to pay the higher superannuation levy. Obviously, superannuation funds are going to have more money coming to them. And then the other areas of spending, health, where there's been more money piled in, and particularly infrastructure spending, where upskilling has also been coming on. So overall, I think basically a credible budget, but one that's got a lot of politics in it. From a medium-term point of view, it gets you back to a fiscal position that looks basically, by world standards, about as good as you can possibly get. Total debt to GDP in the Australian budget is going to be something like 6%. Put that in context, the Europeans are talking about 100% of debt to GDP and the Japanese 200. So the Australian fiscal position is excellent. If you want more details in terms of our analysis of the budget, if you just go to nab.com.au, you'll find them there. Thank you.